Oh, you know, I was just like, wait, anyway. Hi guys. So thanks for coming. My name is Steph Stevens. Margaret Belanger, Meg Belanger, and I, we plan these. Cindy Brandt is here. She's going to tell us all about like tax stuff. But I think more than that, the conversation is really about like questions you guys have, like real life, and I am happy to start off the real life questions that all of us go through. But you guys probably have your own that you deal with, or you're currently dealing with. Anyways, I'm like so excited. There's so many new faces, and I'm just like, oh, I want to get all of your names and know who you are and say thank you for coming. So
you are so cute.
Thank you.
So embarrassing.
It's rosacea. So, anyways, and the wine. Okay. And then, so thanks for coming. And like we haven't done one of these in a while, but it's just like, oh, it's November and it'll be the winter and maybe slower for everyone. So wouldn't it be so exciting to do another one of these? You know, whatever, next month. Next month could be a Christmas holiday, whatever. But anyway, so look out if you have any interest in doing these again, like, look out for another invite to something. Without further ado, Cindy.
Yeah, I'll start.
Yeah,
Okay.
awesome. So Cindy Brandt.
So, hi everyone.
Hi.
I'm Cindy Brandt and I'm a CPA. I have an office in Woburn and I have another satellite office in Haverhill. First I want to thank Steph and Meg for setting this up and inviting me to come meet all of you. And I have to send out a special thanks to someone who's not here, whose name is Doug Levy. I think a lot of you know who he is. Well, he's one of my biggest fans. He constantly sends photographers to me, and I try to take care of them, so I'm very grateful to Doug for what he's done for me. I'm going to start with a few slides, and what my slides are going to do is ask you some questions, and hopefully those are going to prompt you to want to ask me some other questions, because I really think taxes are boring, and I don't want to stand up here and just talk to you about taxes because I'll be waking people up. I mean, I just know it's not a topic that you just want to sit and listen to. I have to do that because I have to learn about taxes, but you guys just have to like learn the periphery, so it's good for you. So I think, can everybody see that, or should you want to lower the lights a little bit? So I just want to start with something that I don't know if everybody's seen this, but this is the new tax postcard that the new tax law that the Republicans have put out is going to be the tax form of the future for up to 90% of the population, according to them. And as you can see, it'll be very simple. And so what I want to ask you guys is, next year when you're all sitting filling out your postcards, because you won't need any help because it's so simple, just think of me, because I'm going to be over there in that line waiting for food stamps. So I just want to make sure that, you don't forget me, because maybe I'll have to get one of you to teach me how to use a camera. So I'll do something else with my life. But seriously, if I thought that was really going to happen, I wouldn't put it up there. So I can tell you, there is no way that they are going to make taxes simple enough that 90% of the population is going to be able to put it on a postcard. It just isn't going to work. So tonight, we're going to hopefully talk a little bit about things that photographers ought to know about income taxes. And don't worry about the tax changes, because they're not going to take place for at least a couple of years, and even if they take place, they're probably not going to be effective right away. So whatever we're going to talk about tonight, you're going to need for a little while. Not to worry. So, here's my first question. You've been really working hard to build your photography business so you can give up your day job. But you haven't been able to make a profit yet. Can you deduct losses? Anybody know? No?
5 years, maybe?
There's a limit, yeah. Basically, there's this thing, it's not nice, it's called the hobby loss rules. And what it is if you lose money at what you consider to be a business, the government can come in and say, you know what, you're not really in business to make money. This is just a hobby for you. So we're only going to let you take losses for 2 out of 5 years. You have to show a profit in the other 3. And a lot of people really worry about this law because it's not hard to show losses in the first couple of years that you're in business. You know, you're buying equipment, you're buying stuff that you need, and you're just building your clientele. So it's not unusual to spend more than you bring in. And that happened to anybody here? No? Wow. Maybe I've got the wrong questions. Anyway, what's important to know about this is that even if you do incur losses in 4 out of 5 years, if you truly are in business to make money and you are truly out there trying to find business and trying to make money, they can't just come along and say, sorry, that's a hobby. If you can prove it's not, then it doesn't matter. So it's important if you get into that situation, whether it's in this business or something else you decide to start or try, don't let anybody scare you with the hobby loss rules, because you can get around them. Okay. You work from home. Can that help you save taxes?
Yeah.
All right. Some people know this one. Okay. What can you do?
Home office?
Home office, right. How's that work?
Can you deduct part of your rent?
Yeah, you can deduct a portion of your home, whatever portion is used as your workspace. And what kinds of things can you deduct?
Internet.
Internet,
Internet?
yeah.
Utilities.
Say that again?
Utilities.
Utilities, yeah. How about your rent?
Yes.
Yeah.
Yeah. How about if you decide, how about if you buy a house and you put in a new kitchen? No?
You could. It's
Why
some
not?
part of your office.
Wait, what? Actually, you can.
Yeah.
If you make improvements to your house, one room in that house is your business room, and you use the rest of the house. Maybe you make coffee in the kitchen. Maybe you get your lunch.
What if you don't have clients coming into your home?
Doesn't
Then you
matter.
had to have
Do you have
clients.
another place that you meet your clients?
Yeah, outside
A
the
studio?
no, like a coffee place.
Okay, well, it's not yours then, right?
Right.
You go to Starbucks and say, meet somebody.
Right.
What if you do have another space that you meet your clients, a studio space? Can you also,
Makes it harder.
like, double dip, kind of, so to speak?
It's, I guess the answer to that is it depends. There's some light up there.
Oh, yeah, projector.
I have to move that. Because I'm looking at you like. Basically, yes, you can do it. If you don't have another place of business, the answer is clear, easy. Yes, you deduct your home office. If you do have another place of business, then you have to be able to prove that there are certain aspects of your business that you actually take care of at home. A lot of times people will have a studio where they go and meet clients to shoot, for shoots, but all their books and records and all their marketing is done from their internet at home, and all their, they do all their other things from home. And if they do it from home, then they have a legitimate home office. What happens is, the government you have to prove it. It's just a little easier to prove it when you have no place else. And Starbucks doesn't count.
And Cindy, by prove it, you mean like if you're audited?
Oh, yeah. I
Like,
mean,
yeah, I mean, otherwise.
you never have to prove anything unless you get audited. Let's face it.
Yeah, yeah.
Yeah.
What if it's just a desk in your bedroom, you know, because it's a room that you also use for personal things? Like, is it true that you have to have them completely separate, like?
Well,
you
and
never
there's
see your
people who will tell you you have to have a separate room, but you have to have a separate space.
Okay.
Okay, so unless, you know, you use your desk as a changing table for your baby too,
Yeah.
okay? If your desk is your desk is your desk, and that's where you conduct your business, then the area around your desk, so maybe half the room.
So buy a big desk.
Okay, but if it's not your desk, then you must have to go to other parts of the house once in a while to do things,
Yeah.
right? Or you might have to store your equipment in the basement.
Yeah, yeah. Can you like if you use half your, use like half your closet for your, like, how does that work with square footage? Like use half of the closet for your, this would be too
You
specific, sorry.
basically just have to have dedicated space, and
Got
as
it,
long as
okay.
you can show that you have dedicated space, and you know, the interesting thing is if you do get audited, they can and often do want to see your office.
Yeah,
So they will actually come to your house and visit your office. Now, they have to make an appointment and you know when they're coming, so
You can make an office at that point.
okay.
So, you know, it's very easy to make sure that the office is ready for them to see. But, yeah, you can deduct your desk area. And the other thing I tell people is that, you know, there's two ways that we sometimes calculate the office space. Say you have an 8-room house, but the very smallest room is where you have your office. Well, we'll just say it's an 8-room house and you get 1/8. On the other hand, you have a small space and you only have 3 rooms, and even though your sofa is sometimes used to sit on and watch TV, for the most part, you know, if you bring a client in, that's where they have to sit too. So I say, use that space. Just be able to prove that the space you're allocating is space that you can use. And then we go by square footage, because we can't say it's 1 out of 3 rooms. But if you have a really big area that you use for your photography, we will use square footage. We always try to figure out which one gives you the bigger bang for your buck. Other questions about that?
Well, go back to the part where the kitchen counts.
Yeah, I actually do work from my house and from my office, so that's why I can answer that question. I do it. But basically, any improvement you make to your house, whether it's putting in a new kitchen, putting on a new roof, putting new shrubs in the garden, doesn't matter, okay? Anything that you do to the house, a percentage of that can be allocated to your business. If you have a landscaper that comes and mows the lawn, allocate part of the cost of the landscaper to your business.
And how do you calculate the percentage?
That goes with the home office percentage that you,
Like an eighth of it? Okay.
yeah. But 1/8 of whatever it costs you to have the snowplow guy come, for example, you can deduct that against your income. So, I mean, the home office deduction is a really good one. If you own your home, a portion of your mortgage interest and property taxes can be written off there. And we'll talk about it a little bit later, but you know, there's that really ugly self-employment tax y'all have to pay on your income. Well, it's really expensive to have to pay self-employment tax because say you're in the 15% tax bracket or the 25% tax bracket, the self-employment tax is another 15% on top of that. Suddenly you're in the 30 or the 40% bracket. So every dollar that you can take off of that income, you're saving 40 cents. So that's a big deal. It can be a really big deal. Other questions about home office? Yeah.
Is it true that if you claim home office, or you're like renting an apartment or something like that, that you're more likely to be flagged for an audit?
Because you rent instead of own?
Yeah, like if you have, like I have a 2-bedroom, and we claim home office. Well, my
Again,
counsel
it's-
told me not to be too aggressive with that stuff, because you're more likely to get audited, so I don't know if that's true.
It doesn't, home office deductions, unlike what a lot of people might tell you, there's a lot of people out there saying, oh, don't do it, it's a red flag. It's not. It's only a red flag if you don't truly have one. But if you truly use a section of your home, no matter how big or small it is, and you can, you know, I mean, I tell people if they want to come out and look, so you put the sofa this way in an L, and over here's your office. You know, you kind of cordon it off so that it looks like you have space that's really just your office, and it works. Any IRS agents in there?
Big time to ask that. Like 20 minutes in.
No, I would never tell you to do something wrong. I have a license to keep, and it's not worth it for me to ever do that. So, you know, I will only tell you what is a legitimate gray area, meaning, you know, there's some black and there's some white, and I won't cross those lines. But there's a lot of areas of the tax code that are gray. And as long as you can support what you're doing, it's okay, and it works. So it doesn't matter whether you rent a small place or you got a 20-room mansion.
Yeah, because I do exactly what you were saying, like the corner of my dining room, it's set up with my stuff, my hard drives, everything.
Yeah, I mean, you
If
have to
my
have
kids come in
place
that
to work.
space, I tell them to get out of my space. So, I think that's,
That's a side benefit.
right?
Get out!
No, they don't listen.
So did that answer your
Of course they
question about
It
the
did.
kitchen?
Yes.
So really, anything you do, and you shouldn't forget anything, you know, if you have an exterminator come, I mean, you name it, anything you do for your home, you should keep track of it, because you can deduct a part of it. Yeah.
So say you, I don't know, haven't been deducting things like your exterminator, landscaper, all that stuff, and then the next year you wise up and you start deducting it. Is it a red flag to go from, have a jump in your,
You know,
any of your expenses or any of your anything?
it really isn't. There's two things that kind of are red flags to the government. One is when your deductions are, including your personal deductions, your business deductions, all of your deductions add up to more than they conceivably can see you have income to support.
Okay.
Okay? That's a red flag.
What if you're filing jointly though?
Right.
Same thing.
It doesn't matter then, because you do have the income to support. Okay, so whether your husband funded something for you or you bought it yourself, you're liable for his taxes, he's liable for yours.
Okay.
Doesn't matter, okay? If you're not married, well, then it gets a little dicey, but if you're living together and you're filing separate tax returns, that, you know, if you both have a home office, it can't be the same desk, you know, that sort of thing. You kind of have to have your own space. But who funds it? And the second thing that's sort of a red flag is when, say you have a job and then you suddenly decide you're going to go into business. So you suddenly had just a W-2 on your return and this year you got a business. That they often look, when there's been a change, they'll look at the return. Doesn't mean they're going to do anything as long as you're doing it right. But if they see a change, or say you suddenly decide you're going to buy a rental property, anything like that that shows a major change in your tax situation can trigger them looking at your return. But it doesn't happen often, and it doesn't, as long as you're doing it right, it doesn't mean anything.
And then how does, like, how does travel work? So say I take a trip to Florida for Christmas and I do a photo shoot while I'm down there, but it's also for a family vacation. How does that all?
Well, what I tell people is don't be greedy,
Yeah.
okay? You can deduct a portion of that trip, but make sure you just deduct a portion.
Okay.
You try to write off the whole trip, you're getting greedy, you could get caught.
Yeah.
Okay, but if you're not greedy and you really did do a couple of photo shoots, or you did some work from there, you know, whatever it is, it's fine. It's legitimate, and you take part of the cost.
How do you calculate how much, like, you know?
Well, I mean, you know what you did.
Yeah, I mean, like if you're 7-day trip and you photograph for a day,
I have a
Well,
good
then,
trip
at
on
least
that
a seventh, maybe more, depending on whether, then you took those photos and you did something with them back at the, where you were staying. I mean, it's all facts and circumstances. The one thing that everybody should remember is it's substance over form. So whatever the real substance of what you did was, that's what's gonna dictate. And, that's why I'm in business, because I'm really good at making sure the government sees it that way. But, that's important. You have to have substance over form. And as long as you can defend it, I can defend it for you, or whoever can defend it for you, and you'll be fine. Did somebody else? Yeah.
Oh, I was gonna say, a good trick for if you're going on a trip and part of it is for work and part of it is not, is if you have a professional Instagram presence. You post the rest of the time you're there, and it's promotion for your business. So you're there promoting the fact that you're traveling and that you're working, and so as a way to actively be doing something for your business every day. Like I've gone to England for 2 weeks. I post it every day. I'm here, I'm doing this, and you're actively doing something for your business every day.
That's
And
very
you can
good,
justify
yeah.
that because I'm posting, that's my professional Instagram, I'm a photographer, here are photos. So, and that's a trick I learned a while ago.
Yeah.
Cindy, this is gonna jump, I feel, but it's sort of tangent. So years ago, someone told me that the IRS, you'll have to tell me if this is like an old wives' tale or something. The IRS was figuring out who to audit. They were contacting wedding venues and asking for photographers that have done work. And then, yeah, I want to hear what you're going to say. We're contacting venues and seeing the photographers that are working there and then cross-referencing that with people that were filing taxes appropriately and stuff like that. And people that weren't were getting hit with audits because they were shooting at venues but not doing their taxes up to par.
You know what? When I call the IRS,
Yeah.
it takes 2.5 hours to get a person on the phone.
Yeah.
Do you really think the IRS
I have no clue. That's what I
have time?
And how would they know like who's shooting at what venue and your taxes? Because it's not like you're writing down.
So they just don't have the resources.
Because the venue's not paying you money. It's not like you're getting 10
No, but the venue, it made sense. The person that told me this, at the time it made sense, and I was just like, oh, that's, because what they're getting is they're getting a list of people that are calling themselves professional photographers because they're shooting work. And say you're your first year shooting weddings, and you're like, yeah, I guess I'm a photographer, I don't know, whatever. And, but you're like, a little fuzzy about, accepting money and, paying taxes and everything else, and yeah, I don't know. So no, okay.
No.
So, okay, the part two to that question is, so whether or not that's true or not, you're saying.
I am not aware of anything like that, but I can tell you that
Well, how
they
do
do
people
have
audit?
things they target.
Okay, well, how do
Okay.
people get selected for audits?
There's two ways. One is if you have that situation where your deductions exceed the
Yeah.
amount of income that you have, and or not exceed, but exceed what they reasonably think you could be spending on those things. You get a number, and that number, if it's over a certain number, you go into a pool for an audit. If you do, there's random, okay, there's just total random audits. No reason, no rhyme or reason, you just get picked. It's kind of like jury duty. They just pick you. Nobody's singling you out, you're just in the pool of eligible citizens and they pick you. Same thing with the IRS, they do that. There are, from time to time, things that they target. Like last year, they decided to look at small businesses, particularly small businesses that operated as S corporations, and they were looking to see whether or not the owners of the S corporations were taking a salary out of the S corporation. And if they weren't, they got put into a pool for audit, because their position is you're avoiding Social Security taxes and we're going to go after you because no corporation runs itself. It's not a person. So there's some person running that company, and you need take a salary for your work and pay social security taxes. Because S corporations don't pay social security tax on their income. So they do things like that, but we always hear about those, we know about them. There's seminars for accountants on what the IRS is looking at this year. So we always know, and we help our clients to avoid those traps.
Or just do things the right way.
Yeah, do it the right way.
So anecdotally, my housekeeper has been audited 3 times
Yeah.
because she doesn't use an accountant. So I think using an accountant is a good way to help avoid.
I think you're absolutely right.
No, but really, like, that's the only thing, she actually does her taxes, pays her, like, she is really legit about how she does things, and she's, like, they've never nailed her but 3 times. In the last 10 years, like, I think it's twice.
You know, you don't know, and I mean, I'm
She doesn't own.
I'm not tooting my own horn, but I can tell you that if you have an accountant prepare your taxes, there's instant credibility. Now, there's a lot of lousy accountants out there, I can tell you. I'm not one of them, of course, but there are. And even if they are, you've got CPA at the bottom of your tax return and they signed it, you get put into a certain category. And if you do your own, you get put into another category. I have so many clients that'll get a notice from the IRS and they'll call me and they'll say, you know, I sat on the phone for 2 hours and I finally got through and they were really nasty to me and they didn't help me and I'm like, why did you do that? Why didn't you just send me the notice? I have a special line I call and they're really nice to me. They're always nice to me because I have that CPA at the end of my name. And, you know, whether it's right, wrong, or otherwise, that's the way it is. So it does pay to have somebody help you with your taxes because it gives you credibility.
So tell me, what do you need for me to like hold on to for receipts and stuff like that?
Oh, you're going past, I should move my slides along. We're not in home office anymore, hold on. We're not at home anymore. Yeah. We're gonna skip these and come back to them because I wanna go to.
So it makes it easier, but it doesn't stop you.
Right.
So the answer to this question, what do you think it is?
Yes.
Yeah.
Do it, but yeah.
It's, you know, it's gotten easier. Like now when you go visit people that you're gonna, you know, maybe do a wedding for or what have you, there's apps that you can start and stop so you get your mileage and stuff. I mean, think of me when I had to keep a little book. Because I was around when all you had was a little book. But you have to keep track of your expenses. It's, yeah.
Is it true that you don't have to keep receipts under $75?
You don't have to keep receipts under $75, but you have to, how do I prove it? How do I put this? If all of your receipts are under $75, you're gonna have a problem. So you don't have to keep small things, but certain things you do, like meals. If you don't keep meals, they're not gonna give them to you. I don't care if you went to Dunkin' Donuts. Okay, they're not gonna give it to you. The other thing they're not gonna give you is gasoline.
Even if it's like just the same credit card that shows where you went.
Well, if you have the credit card bill and you don't have the actual receipt, that's okay, because most of the time they'll accept that, and even if they won't, you can always go to the credit card company and they can get the backup for you.
So what about like bank cards? So I have one bank account that's set for my business and that's the card that I use for everything.
Aren't you good? I wish I had more like you.
I don't know, I'm still being audited 2 out of 5 years, so.
Oh boy, really?
Forget my using.
Oh. Have they found anything?
No.
And they still come back?
Well, they did, I had a federal audit 3 years ago and I'm being audited by the Massachusetts state. right now.
Oh, yeah, Massachusetts is, they need money. You just have to feel sorry for them, they need money. So they go
Yeah.
after a lot of people, but, you know, the unfortunate thing is they don't really find a lot of money usually. Because they don't give you anything to deduct for the most part. They're pretty, you know, Massachusetts kind of taxes you on your income. Not if you have a business, you get to deduct business expenses, but nothing else. But yeah, unfortunately, you do have to keep, but I'll back up on the gasoline receipts. I personally think you should take the mileage deduction. The mileage deduction is usually better than saving all your receipts, unless you really had, 90% business and tons of repairs. But if all you do is have gasoline and an oil change and, the normal stuff, maybe a muffler every 5 years or that sort of thing, you're better off taking the mileage deduction because it almost always comes out better. We will calculate it for our clients both ways if they bring us all their receipts. Well, actually, I should back up. I don't like them to bring us all their receipts. They bring us a nice little spreadsheet that summarizes all their receipts because I don't want to see the receipts. I just want to know you have them. But you really do have to keep just about everything. And, any equipment you buy, anything like that, you need to keep the receipts. Yeah.
What if can you use Google Maps to sort of back up your mileage, to prove it? Like, if I have a spreadsheet that has, the point from start to finish and it's just, is that enough or?
You know where you went because you have a calendar, right?
Yeah,
So, what I tell people is save that calendar
yeah,
because if they ever decide they want to talk to you, you just pull out the calendar
we're
and,
there, yeah,
you figure it out.
yeah.
You did you made the trips and I don't want to say that you don't have to be precise. I mean, you should take your odometer reading at the beginning of the year. You should take it at the end of the year. And then you should determine, pretty much how much mileage you did that was personal and or business, whichever is smaller to calculate. And, then the opposite one you don't want to take. Because one thing I'll go back to is don't be greedy.
Yeah.
Nobody uses their car 100% for business. And anybody who tells me that they do, I tell them, really, who buys your groceries? Who goes to the drugstore for you? Who does all these things? And usually they say, well, I probably do use it a little bit for personal. Don't be greedy. Try and keep track. It's really hard. But you know where you go, and keep your calendar, because you can always back into it if you have to. Yeah.
Maybe a little too specific, but what if you use 2 different vehicles for business? Like,
Yeah.
Again, if you're using the mileage rate, it really doesn't matter. You just keep track of how many miles you went. They don't care which car you used. If you have 2 cars, it's a little bit easier to prove that you used it for business because you can always say, well, I use the other car on weekends for the kids, and this car I always use for work. But you have to be able to prove it. The real answer to all of this is document it enough that you can prove it, and they'll leave you alone.
Are car payments deductible
Or what?
Car payments deductible?
Car payments are to the extent that you're paying interest.
So,
But if you buy a car, okay, and you use it 60% for business, well, you can take 60% of the cost of that car and depreciate it. So say you buy a $25,000 car. Well, you can write off $5,000 a year times whatever the business percentage is. So if it's 60, then you'd be able to write off $3,000 a year of the value of the car. And in addition to that, as you pay down the loan on that car, whatever interest you pay, the interest portion of your payment is also deductible. Not the amount you're paying back, but the interest.
That's in addition to mileage?
No,
That's,
you either can take actual expenses
got it.
or you can take the mileage deduction. You can't have both.
Yeah.
And they will see that. That's one that it's very easy for them to tell if you try to double dip. So it's not a good idea.
Sorry,
Yeah.
when you say the mileage deduction, is that like a standard for federal and state, and like what is that?
Yeah, last year it was 54 cents a mile.
Okay.
So, you know, if you went 10,000 miles, you got to write off $5,400. A lot easier than keeping track of $5,400 worth of gasoline. You know, it's just a lot easier. And the way that the 54 cents is calculated, it usually covers those oil changes and the routine maintenance of your car. So you're getting a deduction that really rarely is smaller than what you actually spent times your business use. So, any other questions about keeping receipts?
Just, yeah, to circle back, so if you're not saving receipts, but you're buying everything on a company card, that's okay?
Well, if it's going through your bank, you mean like a debit
Yeah,
card?
bank account for my company, that card is just. for
Yeah, I mean,
itself.
that, I tell everybody, you should always have separate bank accounts, separate credit card, separate, you know, keep your business separate. And especially if you have an accountant, keep it separate, because you do not want to pay me to figure out which meal you went to with your kids and which meal you went to with a client.
Gotcha, yeah.
Okay, so it's important to keep everything separate. But if you're using a debit card, as long as what I tell people is just go through your bank statement and notate, if you used a debit card and it says Staples, that could be personal, it could be business, could be a lot of things, or it says Dunkin' Donuts, you know, just go through and quickly mark off the ones that you're going to consider business if you don't have a separate account. But it's much better to have a separate account and just use that debit card when you're actually on business. Don't use it when you go to Disney World.
Or buy a Red Bull on the way there. Oh, this is business.
I was gonna say, this is business.
That's not my opinion.
Yeah, this is not, whatever cost you tonight, you know, this is business, so, you know, didn't cost you anything, I don't think, but you had to get here, so.
Did the meals and entertainment deduction change at some point? Can you still deduct meals and stuff?
50%.
50%.
Yeah, and that's not new.
No.
That's been that way for a long time. Yeah, I mean, I think there was a time when you could deduct the whole thing, but it's been a really long time. What'd you say?